Gold and silver hold a significant place in the world of investment assets, revered for their historical and intrinsic value. Throughout centuries, these precious metals have played a pivotal role as stores of wealth, acting as a universal symbol for prosperity and stability. Investors often turn to gold and silver as a means of safeguarding their portfolios against economic uncertainties and market volatility. Diversification is a fundamental principle in constructing a resilient investment portfolio. As the saying goes, don't put your eggs in one basket. Including gold and silver in a diversified portfolio can serve as a hedge against the fluctuations of traditional financial markets. These precious metals have historically shown a lower correlation with stocks and bonds, providing a level of insulation for investors during times of economic downturn or market turbulence. Delving into the historical context of gold and silver reveals their enduring role as stores of value. Dating back to ancient civilizations, these metals were used as currency and symbols of wealth, showcasing their timeless appeal. This continuity of their value through various cultures and periods highlights the enduring allure of gold and silver. Gold and silver possess unique properties that make them particularly attractive as investments. The limited supply of these metals attributes to their scarcity, enhancing their desirability. Additionally, the tangible nature of gold and silver sets them apart from other investment vehicles. Unlike stocks or bonds, investors can physically possess these precious metals, adding a tangible and reassuring aspect to their investment strategy. Furthermore, gold and silver serve as effective hedges against inflation, preserving their purchasing power over time and providing a safeguard against the eroding effects of rising prices in the broader economy. Why invest in gold and silver? When comparing gold and silver to traditional investments such as stocks and bonds, it's essential to recognize the unique characteristics that make precious metals an attractive option. Unlike stocks, which represent ownership in a company, and bonds, which are debt instruments, gold and silver are tangible assets with intrinsic value. Their value is not dependent on the performance of a specific company or government entity, providing a level of independence from the fluctuations of the stock and bond markets. Gold and silver have long been regarded as safe haven assets during times of economic uncertainties. In moments of market instability, geopolitical tensions, or financial crises, investors often flock to these precious metals as a store of value and a means of preserving wealth. The historical track record of gold and silver as reliable safe havens reinforces their role of stabilizing force in investment portfolios, offering a degree of protection when other assets may experience volatility. One of the compelling reasons to invest in gold and silver is the potential for capital appreciation. While these metals can act as a wealth preservation tool, they also have the capacity to generate returns over time. The prices of gold and silver are influenced by various factors, including supply and demand dynamics, economic indicators, and geopolitical events. As a result, savvy investors may benefit from capital appreciation in their precious metal holdings, especially during periods of economic expansion or when global uncertainties drive up demand for these assets. This dual role of wealth preservation and potential growth makes gold and silver a versatile addition to the investment portfolio. Different ways to invest: physical gold and silver. Investing in physical gold and silver involves acquiring tangible assets in the form of bullion coins and bars. Bullion coins, such as the American Gold Eagle or Canadian Maple Leaf, are government minted and recognized for their purity. Bullion bars, on the other hand, come in various sizes and are valued based on their weight in precious metals. Additionally, some investors are drawn to collective coins for their aesthetic appeal and historical significance, although they may carry higher premiums. Paper gold and silver. For those seeking exposure to gold and silver without physical possession, paper investments offer alternative avenues. Exchange-traded funds are financial instruments that track the price of precious metals. They provide liquidity and ease of trading on stock exchanges. Futures and options contracts allow investors to speculate on the future prices of gold and silver without owning the physical assets. These paper investments can be more suitable for those looking for flexibility and liquidity in their precious metal holdings. Investors can also gain exposure to gold and silver by investing in mining stocks. This involves buying shares in companies engaged in the exploration, extraction, and production of these metals. Exploring gold and silver mining companies allows investors to participate in the potential profitability of these operations. However, it comes with risks such as operational challenges, commodity price fluctuations, and geopolitical factors affecting mining regions. Balancing these risks against the potential rewards is crucial when considering mining stocks as part of an investment strategy. Factors influencing gold and silver prices. The prices of gold and silver are subject to various factors that contribute to the dynamic market valuations. Supply and demand dynamics play a fundamental role, as limited availability enhances the perceived value of these precious metals. Economic factors, including GDP growth and unemployment rates, influence investor sentiment and demand for safe haven assets like gold and silver. Geopolitical events also have a significant impact on gold and silver prices. Uncertainties rising from political tensions, conflicts, or global crises often lead investors to seek the stability of precious metals, driving up their prices. Moreover, interest rates and inflation play pivotal roles in determining the opportunity cost of holding gold and silver. In times of low interest rates or high inflation, the appeal of these metals as stores of value tend to increase, influencing their market prices accordingly. Understanding these multifaceted factors is essential for investors to make informed decisions in the dynamic precious metals market. Risks and challenges. Market volatility is a prominent risk associated with investing in gold and silver. The prices of these precious metals can be subject to sudden and significant fluctuations, influenced by various economic factors, geopolitical events, and shifts in investor sentiment. The inherent volatility poses challenges for investors as it requires a strategic approach to navigate and mitigate the potential losses. Being aware of market dynamics and having a well-thought-out risk management strategy is crucial to weathering periods of volatility in the gold and silver markets. Storage and security concerns arise particularly when dealing with physical holdings of gold and silver. Unlike digital and paper assets, these metals require secure storage facilities to prevent damage or theft. Investors must carefully consider storage options, whether it be a safe at home, a bank vault, or a reputable storage service. Each option comes with its own set of costs and considerations, and finding the right balance between accessibility and security is vital in safeguarding one's precious metal investments. Regulatory and geopolitical risks introduce additional complexities to gold and silver investments. Changes in government regulations or geopolitical events in major mining regions can impact the supply chain and potentially disrupt the market. Additionally, regulatory changes affecting the taxation of precious metals can influence the overall attractiveness of those assets. Investors need to stay informed about regulatory developments and geopolitical trends to anticipate and manage potential risks associated with their gold and silver holdings. Practical tips for investing. Setting realistic investment goals is a foundational step for anyone considering gold and silver investments. Clearly define one's financial objectives, risk tolerance, and time horizon helps guide the selection of suitable investment strategies. Whether the goal is wealth preservation, capital appreciation, or portfolio diversification, having realistic expectations is essential for a balanced and sustainable investment approach. Timing the market and employing dollar-cost averaging are two practical strategies for navigating the volatility of the gold and silver markets. Instead of attempting to predict short-term prices and movements, investors can benefit from consistently investing a fixed amount at regular intervals. This approach, known as dollar-cost averaging, helps mitigate the impact of market fluctuations and can be an effective way to accumulate precious metals over time. Researching reputable dealers and investment products is crucial to making informed investment decisions. There's a wide array of gold and silver products available in the market, ranging from coins and bars to ETFs and mining stocks. Conducting thorough research on dealers, understanding the terms and fees associated with different investment products, and seeking recommendations from trusted sources contribute to a well-informed investment strategy. Choosing reputable and established entities for transactions help ensure the legitimacy and authenticity of the precious metals acquired. Tax implications. Capital gains tax on precious metals is an important consideration for investors looking to profit from the appreciation of gold and silver. In many jurisdictions, gains from the sale of precious metals are subject to capital gains tax. The taxation treatment can vary based on factors such as the duration of ownership and the specific form of the precious metal. Short-term capital gains, typically from holding periods of less than 1 year, are often taxed at higher rates than long-term capital gains. Investors should be aware of their local tax regulations and consult with tax professionals to understand how capital gains on gold and silver investments are treated with their specific jurisdiction. Reporting requirements for precious metal investments are another aspect that investors need to be mindful of. Tax authorities often have specific reporting requirements for transactions involving gold and silver. This may include reporting in the purchase of sales of precious metals, as well as the details of any gains or losses incurred. Failure to adhere to these reporting requirements can result in penalties or legal consequences. It's crucial for investors to keep accurate records of their transactions, including purchase prices, sales prices, and dates, to facilitate the accurate completion of tax forms. Seeking guidance from tax professionals can also help ensure compliance when reporting requirements and minimizing the risk of unintended tax consequences associated with precious metal investments.